Hey, welcome back to the channel where we talk about the stock market and learn about the stock market and learn about other financial stuff that we could do for our family and for ourselves. So let's get started. Well, this is today, September 15th, 2021, and we're looking at Amazon. This is my chart set up. You see I got the VWrap going, and then also I have this solid green line on top and a solid green line on the bottom. Excuse me. The green means to get calls, and the red means I'll go short. So these are, it's called a 5-minute rule. So every 5 minutes of the day, these candles represent every 5 minutes in the hour throughout the day. So if you look at Amazon, it opened up red and it dropped all the way down to 34.0201, and it creeped up a little bit. But if you notice, it didn't break over my VWrap line, so that indicate no trade. So about 11:35 today, my time, I don't know about your guys' time, it finally broke over the 5-minute low mark, and then just kept going up, keep going up, keep going up, keep going up. So if we were going to take this trade at, if we took this trade at 11:40 today, we'll look at the option and see what it did. And I trade weeklies, but to be on the safe side, you should go at least 3 months out when you're trading. I'm a high risk trader, so if you want to be a safe trader, at least go 3 months out. I'm sorry, my dog's barking outside. She don't like people. So here we are. We're on the option chain here. These are the strike price. The strike price is where you think what the price of the stock's going to be at when you buy your contract. Anything in the blue is an ITM. That stands for in the money. And anything in the black is OTM, out of the money. So we're looking at the calls because we're green, so we're looking at calls. And this is live. This is going on right now because it's still during market hours. And I believe it's trading at 34.79. But these prices right here, this is your bid, this is your ask. This is when you buy, or no, when you want to sell and when you want to buy. Sorry. The little cursor will tell you exactly, and you'll see how the prices change quickly because it's getting close to being the end of day trading. So excuse me, for me, like, I would took the 35.50 call, and if you look here, after that drop this morning, it dropped down $58. This right here is your volume. This is how many contracts are being bought and sold in this. This is the current high price, what it hit. This is your open price here. So we would have waited to, where it was safe to buy in and we would probably have bought in between $58, maybe up to $70, not too much. And close, right now it's selling at $3 a contract. So you think about it, if you did 60, or if you bought one contract and you bought in at 60, you would have made a couple $100 in profit. That's the goal. Start your count small, buy one contract at a time, and build your count up so you could buy 10 contracts at a time. So, like, sorry. So 60 contracts, that's $60. And you times that by 10. Times that by 10 at $600 investment. Now, if you sold just say at 380, where it hit, it hit 390. If you sold at 380, so that's $380, and you times that by 10, that's $3,800 that you would have made today off your $600 investment. So you minus your $3,800, you minus your $600, what you invest, equal, you would have made $3,200 profit. But then you also got to remember the price of your contracts to buy a contract. So each broker has different price range to buy contracts, and if you're using a free broker where they don't charge, you're only a limit to buy so many contracts. I don't think you're allowed to buy over 5 contracts at a time. But also, some of them free brokers, they don't tell you, but they do take a little bit of commission from you for using them. So that's what your commission, your commission fee is. That's what pays your broker. And my commission is 65 cents for contract. So for me to buy 10 contracts, it would cost me $6.50 on top of $600. So that'd be $606.50. So I still made a little bit of good profit. So let's go back. Let's go look at some more charts. Kind of give you guys an idea of, what kind of money you can make in the market. Like I said, I'm starting all over again. I'm slowly building my count back up, and then once I hit 1,000 subscribers or more, I will start doing some live trading so you guys can see my trades. All right, this is Chipotle. Look, it started down, went up, and it broke at 9:50 this morning, 9:55, somewhere around there. Didn't want to do that. Now let's take a look at the option on this. And we'll go out of here. We go CMG. I'm waiting for it to load up. So it's trading at 1883. Probably go about 1900. Yeah. Let's say go 1910. That's your volume. It's a real low volume, but that's okay because sometimes low volume is a good thing. As the stock starts running up, the volume will start following in. So it opened up at 70 cents, and the high $3.10. That's $310. So $70 up to $310 for the trade. Not a bad trade. Still profit. But if the spread on here is a little tricky to trade because they're trying to sell at 260 and well, sorry. For some reason I told you guys wrong. This is the asking price. This is the bid price. This is what you want to buy at. This is what you want to sell at. Sorry, I told you guys wrong. I need to go in and change my settings because a long time ago I was selling calls and selling puts. So that's the reason why you see on the ask side it's a buy and on the bid side it's a sell, because I flopped it around for selling calls and selling puts. But you want so you want to sell at 340 and you want to try buying at 260. Sometimes you don't even get filled on a trade. That's okay. When you don't get filled on a trade, that means that trade wasn't meant for you. Don't get discouraged. Don't get upset because you didn't get a chance to take that trade. It's okay. Patience is the key of trading the market. Sorry about that. All right, let's go look at Netflix. I'll just go ahead and get the option chain set up. And we'll go to charts. Change that to Netflix. See, it opened green, but it also went short, went red, bounced back up, and it kind of just went flat through the day a little bit. And then it just broke out. That is a nice trade right there. Patience is the key of success, and that's one of my mistakes back in the day when I was trading. I got greedy. I didn't care. I was jumping into trades, just trying to dominate everything. But you learn as you go, and that's why I'm here telling you guys, be careful. All right, so we're trading at 584. See, not much movement. Netflix is a really hard stock to trade with options. I know we'll get into about scalping later on down the road. We'll go back to charts and let's see. Did we look at Tesla? I don't think we have. Let's go. Oh. Sorry. Tesla had a nice little breakout this afternoon. All right, let's go look at the option on it. All right, so I like trading out of the money, but you really want to be more in the money when you're trading, because when you're trading in the money, you have a more chance, really making your return. So for someone like me, I like the risk, but when you're risking is a gamble, but if you cut your risk ratio down, it's nice. So $7.75, you know, we can even go $7.70 right here. $35. Open up at 86, it dropped. The high was $1.50. I mean, $70. $70, you could have sold it for $300. Not three. 150 plus 150 is $300. So $70 minus, $70 minus $350, still a nice little profit. All right, let's go back home, back to the charts. I want to show you something. This little box right here is a grid. Like, I could click on that, and let's see, we'll just go 6 grid, and this will change up. So I got my Amazon, Chipotle, Netflix, Tesla. Why do I got 2 Teslas? I don't know. Maybe it's the way I had it set up a long time ago. So we'll just throw Pepsi in here. And I'll probably have to do some change. Yeah. No, it still looks good. Pepsi had a nice little breakout. Alright, let's switch this back to one chart. And when I change around, things get funny. But that's alright. There we go. Look at that. Nice little breakout at opening this morning. Kind of went flat. It dropped. And then this afternoon, boom. Now let's take a look at the option on this. And if we're going to get calls, I mean, look. See, that's trading real low. That's got 101 volume on it. Open up at 86. And it's got the high for 162. That would have been a nice little small trade. Not too risky, but still a nice little trade. Yeah, my dog's going crazy again. So another thing good about this setup, using Thinkorswim, you see this on demand. After market close, you can click on this and you can go back in the evening time and practice your trading with it. You know, you could watch the market, rewatch the market, or rewatch the stock. You can go back and you can say, oh, this is where, I could have bought in, or, oh, okay, this is where I should have sold, or, oh, wait a minute, that's a hammer, or, you can learn your different style candles. And there's a candle charts out there. It's online. You can pull one up, print it out, and study it. And it will help you guys a lot. And then over here, you can add stuff through here. But I try to keep mine simple, very simple. I know traders, they have a bunch of stuff floating around their candles. They got so many indicators and all that. Not me. I have a plain 1 day 5-minute candle chart with the VWrap, with my 5-minute high, my 5-minute low. It's nice and clean, you can see. And then one indicator is my MACD. If you look, you can see your MACD, the green line. It matches your green candles. Now when it went short, your red line came above your green line on your MACD. That's the one way you could tell, you know, once you see it start crossing, like it started crossing right there, you could have sold your, you know, you could have bought here, and you could have sold right there. So that indicator lines strictly straight up with the chart. And then your TTM squeeze, this will let you know, oh, wait a minute, we're gonna, it's short, 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 and then we just go flat, because that's evening time. And in the mornings, it'll start about 5 a.m. roughly, be about 5 a.m. You'll start seeing pre-market stuff, and then you can see it go up, and then down again, back up again, down again, and up. This one right here kind of just let me know if they're squeezing the traders out of the trade, or they're letting them go, because the dark blue is a squeeze, but it's still above my 5-minute mark. The lighter blue, it means it's running. It's going to just run. So that's all I got for the day. I will bring some more information about, if you have family and you got kids, I will be talking about that tomorrow, how you could set your kids' financial freedom at a young age. I mean, I wish I'd known all this when I was younger. I wish I had, you know, parents that would have taught me, you know, how to manage money, or how to make myself better. But, you know, the old saying, go to school, get an education, get a job, go to college. Why go to college? I mean, yeah, go to college. You know, it's great. I'm not doubting college education, but it's good. But I know people that went to college and got a degree in college, and they can't even find a job for that degree, or what they went to school for. Or they get a job, but it doesn't pay like they told them what the pay would be for it. So this is what I'm talking about. Financial freedom, doing it this way. You do pay taxes on capital gain, but that's okay, because in the long run, it will pay for itself. So tomorrow we'll get into a little detail about how to make your kids get them financial freedom at a young age, and how to build their credit before they're 18. So I will see you guys tomorrow. Thank you for joining me. Have a good evening and enjoy. Thank you for watching. And if you liked the video, give it a thumbs up. If you're new to the channel, hit that subscribe button, because every day we're going to be bringing something to you, and we're going to show you different ways to trade the market. So have a good night.